Three of the biggest lessons when it comes to swing trading in the stock market. What's going on, guys? My name is Thomas, and today we are going to be covering three different swing trade strategies, lessons, rules, whatever you want to call them, because they all can be kind of intertwined in a sense, and they could build the rules, or they can build the strategy that you're going to ultimately build out and come to ultimately trade yourself. Now, in the stock market, the problem that people have is that a lot of people want to get into swing trading. And day trading, there's a little more of a barrier entry because of the PDT rule, which, by the way, there's plenty of videos out here, other channels that show you how to get around that. And to be honest, the PDT rule is not why you're losing money. But that aside, let's talk about swing trading. I want to make this short, but I also want to make sure you get something out of the video. I started swing trading, at least to what I know is swing trading, I guess prior to 2019. I didn't know much. Back in September 17th, actually, of 2019. And I started with penny stocks. At that point in time, I took roughly $0. $250 is what I deposited initially into the account, up to over 50K. Lost a fat chunk of that, and then have built myself back up into the 30s just about 3 years later from essentially scratch. So starting with scratch in college, broke ass, like literally I had no money, $5 in the bank account. Like I'm not even, I kid you not like nothing, okay? Like sports betting addiction in, sophomore year, lost all my money in 2016, 17 in options, took some time off from the market. Then I got back into it, fresh eyes, fresh set of, okay, let's try this again. Here we go. There's a lot that has occurred over the past 3 years that I have learned. Boiling it down to 3 points is difficult, but number one, which is the most important thing, when I step back and I take a look at the overall markets and I take a look at the overall style strategies, you can have the best technical setups. You can have the best risk reward. You can have all this stuff, but if you don't have a fucking clue about what is going on macro in the markets, in the economy, you are absolutely doomed. There's no ifs, ands, or buts. At the end of the day, you'll have times where, it'll be easy, right? Market's hot or it's weak and you're just swing trading stuff to the downside, But there will be times where things are choppy, you're getting slaughtered, you don't have a feel for the macro, and that is one of the most, if not the most important thing that I would take away over the past 3 years of doing it. Pretty much for 3 years, okay? Do I love it? Yes. Do I hate it at the same time? Yes, because you go to bed every single night and you're sitting back and you're thinking to yourself, I'm in this position, but what if something happens tonight? What happens if there's some news? Like, I can't do anything about it. I'm in this, I can't get out. So you have a lot less that you can control intra-trade. Overnight is more so what I mean. So you better have a freaking good clue about the macro environments in the markets. Are we risk on? Are we risk off? Commodities. Like, do you have any clue about what's going on with oil, what that means, what the US dollar is doing, what bond yields are doing, and how that affects things? If you don't, you better have a good feel for that stuff, because if you start to align yourself, or you're thinking you're on all these different swings, and these same swing trades that worked this year, or back in 2018 or 19 or 2021, they might not work in 2022, 2023, 2026. There will be different macro environments, and that is ultimately what's going to change things. Those different macro environments are massive in terms of your understanding. And if you understand the macro or have a decent feel for the macro, that is where you should start when it comes to identifying sectors, stocks, in terms of swing trades. Start there. Macro first, top down, and then dial it in, okay? Start broad and then dial it in. Number two, the crowded swing is not your friend. Now, yeah, you can have times where enough volume comes into small caps and penny stocks and this and that, and we can send these things and traders can send these things at crazy levels, and it's easy money. Just buy a dip and swing it overnight and swing it for 3 days, swing it for 5 days, swing it for a week, and the thing just keeps going up. That was the COVID environment, 2020, 2021. That's definitely not how things are anymore. There will be flashes of that, but the crowded trade, especially when you're swinging, offers so much more risk because you have all of these irrational, emotional idiots in the same freaking stock. And when that company has a piece of news, an earnings report, something comes out, big picture, that could shake people up, scare them a little bit, that might not actually mean much, you're going to have all these reactions. And once the backside is established on some of these trades, it can be devastating and the downside could be massive, okay? Now, obviously, coming from more of a small cap penny stock perspective, yes, it could be really, really bad if you're chasing at highs. Yes, I understand, and yeah, not everyone's going to be swing trading small caps. You might swing trade individual stocks or ETFs or sectors, whatever, and it's a different story there. But the same idea applies in terms of the backside. We just saw it, and maybe oil bounces and goes higher in the next couple of years, but we just saw it in the medium to short term, right? With oil. When oil spiked up to its highs, guess who was calling for $150, $200, $300 oil? All these big boys, these big guys, hedge fund managers, all these guys, massive companies, Morgan Stanley, huge companies on CNBC, they'll talk about it. The oil trade is going on. And guess what's happened? Once that trend broke down, it was strong for some time. Once that trend broke down and they were saying buy the dip, and that big picture trend started to crack, and we had the macro view of the economy, going back to point one, that was headed for a recession, which historically oil goes down and crashes in those times. That was the setup to play the opposite side. And if you kept buying the dip, you're still buying the dip. You're still buying the dip, and the thing keeps going lower. So you want to be careful about that because that backside is nasty. Why? Because you have a lot of bag holders who are holding from so much higher that every pop immediately sell into. Okay, think about this. If I buy, let's say a small cap, let's say I bought AMC, right? AMC will do its thing and whatever, who cares what happens in the future? I don't know. If I bought AMC at like $70, right? And I average down, and then it pops from 30 to 40, and I bought in the 30s, I might take a dump on that 40, and I might take a ton of it off, if not sell all of it, right? And so you have a lot of people who are in that, that's their mind, that's their psychology, right? Going into the trade. Well, I may as well just take my break even or take my loss here. It's not as bad as it was. That is what you're fighting on the way down, on the backside of these trades. And that is one of the nastiest things. And if you can avoid that or at least notice it early, you're going to put yourself in a much better place. It's why I like the quiet names, like the bottomed out plays. I like the stocks that I like literally when I do live scans for small caps, especially these days, I want to see that no one's talked about this stock, or relatively speaking, there's minimal talk about this stock. I don't want to see big accounts talking about it. I don't want to see big pumpers and no. I don't care if it's even down from when they talk. I don't care. I want these things to be fresh. I want them to be untouched, not full of bag holders. That's ultimately the game when it comes down to finding those swing trades. Okay. Final point, number 3 is the contrarian trade. So we talk about this a lot. And when a lot of people are, one side in the market or on a stock, it tends to actually pay to go the other way. The problem with the contrarian trade that you need to understand now, first off, it's actually, I think, and I like this trade a lot. I love playing against the crowd, especially after substantial moves. If the crowd is very, very bullish on, let's say, some penny stock, and the stock is up 20% off the lows, the risk reward there on going against the crowd, you're asking for trouble because penny stocks can move, 50, 100, more than that, a very, very short period of time. So a stock that's only up 20% off the lows, you're asking for trouble. But after big, massive extensions up or down, the contrarian trade gets me very, very interested. The problem with this trade is that in the short term, you can have a good feel of the macros and say, okay, everything's lining up for this to reverse. I'm playing against the crowd. I'm not playing with the crowd right here. But the problem with that is it could go on just a touch longer. And so this bleeds in, the contrarian trade bleeds into having patience and proper risk management and sizing. If you're going to trade the contrarian view, you need to know how to scale in and scale out, and you also need to have patience because your thought process and your macro view can still be coming down the road. The problem is if you exit or you say, you know what, screw it, I'm out, it's not working, tends to be just before that turn comes. So you have to have the patience to stick through that swing trade and make sure when you're entering that you have a long enough leash on there to add into a position that you ultimately want to be in with some sort of risk or stop in place. If this happens, I'm out. Many times what I'll see, especially if you're trading bigger picture sectors, not individual stocks that will move with the macro structure, then you have to look at macro signals that will tell you to exit the position. And you're not so much looking at the price, you're more so looking at the macro signal. So if you're going to trade the contrarian view and you're going to be trading based off of, let's say, macros, then let the macros stop you out. Understand the range of the stock or whatever you're trading and have a plan in place, because you could be wrong for a decent chunk of time if you're playing that way. But as long as you are able to add in properly into that position and the macro has not changed, maybe it could be even setting up even further in your favor in terms of how things are playing out, just that the price action hasn't moved yet. Those moves can come, and they can come in an aggressive fashion once that trend shifts. And it could be that just final move to trap those who are playing with the crowd before, boom, they get slapped, and then that reversal kicks in, and now, boom, look at you, you're in the green, and you are moving, right, in terms of that trade. So the biggest things, again, to walk us through, understand the macro, avoid the crowded trade, and then when it comes to playing the contrarian, which I love playing the contrarian side of things when it comes to swings, just make sure you have a nice long enough leash in terms of adding in, and also make sure you have the patience to let it play out. If you're going to wait and say, okay, well, it didn't move tomorrow after I entered, again, it's a swing. What's your time frame, right? If you're looking macro, your time frame is probably weeks to months to potentially quarters. And it's not something that necessarily has to happen next week, right? And those are ultimately some of the biggest takeaways and lessons that have helped me, or that I've really learned over the past, let's say, 3+ years of swing trading in the stock market. Various things, penny stocks, options, sectors, all of that good stuff. If you got any value out of the video, make sure you are subscribed here to the channel. Consider hitting the thumbs up button. I appreciate you guys who do so. It helps out a ton, and I will see you in the next one. Peace.